All stations, this is Unify News. I am Santosh. In the next 60 minutes, we will cover the global politics, financial economics, and the global marketing. Without wasting the time, let's move to the top development stories. The US has successfully rescued a second drowned pilot in Iran, an operational confirmed by the President Trump this morning. This was impact on the American military personnel and their families. The rescue of F-15 fighter pilot followed intense cross-border operations after an earlier crash while the Iran claims to down their second aircraft. During the extraction, US officials report the mission was success. Expect heightened security alerts at US bases worldwide. This successful extraction prevents a hostage crisis but risks immediate acceleration in already volatile region. The Organization for Economic Cooperation and Development have officially hiked its 2026 US inflation forecast to 4.2%, clashing with the Fed's much lower production. The American Consumer and the Federal Reserve, the international agency, revised its figures upward from 3%, citing the winding the Middle East conflict as the primary driver for surging costs. Watch for the Feds to possibly delay interest rate cuts. A 1.5% gap between the OECD and the Fed creates massive uncertainty for the mortgage rates and long-term borrowing. As an S&P 500 test, new highs, analysts are warning of a sneaky risk hidden within passive index funds. This was impact on the retail investors and the 400k holders. Concentration in the handful of the tech gains has reached a topping point, making the entire index vulnerable to the single sector sell-off. Review your portfolios for the or exposure to the big 7 techs. If the tech bubble pops, even safe index investors could see double-digit losses. California's Department of Financial Protection and Innovation has officially opened its digital financial assets licensing portal, forcing crypto firms to register or exit crypto startups and California-based traders. That move follows the 5th anniversary of the California Consumer Financial Protection Law, which has already clawed back over $1.5 million for consumers from predatory financial firms. Check if your exchange is compliant with the new digital financial assets law standards. As the largest state, economical California regulations often become the de facto national standard for the US crypto market. Oil prices are swinging wildly today as the Iran signals a soft opening of the Strait of Hormuz for the cargo vessels. Gas prices are shipping companies. Crude fell roughly $1.30 in early trading after Iran's announcement, but prices remain sensitive to any news of US-Israeli strikes on Iranian infrastructure. Monitor West Texas Intermediate crude levels at the $85 resistance point. Energy costs remain X factor for the 2026 inflation outlook. Nissan is aggressively ramping up its US manufacturing footprint to dodge the latest round of Trump administration tariff. This was impact on the American auto labor market and the car buyers. By moving more assembly to the domestic plants, Nissan aims to keep sticker prices stable despite the 10 to 20% import duties on foreign parts. Look for the shifts in vehicle pricing as the other foreign automakers follow suit. This marks a major victory for the American first manufacturing policy but may lead to the high production cost in the short term. The US dollar is gaining ground, but a sudden surge in the Swiss franc suggests the global investors are getting spooked. This was impact on the international travelers and the import-export businesses. The greenback gained 53 points today, yet the franc appreciation to indicate flight to safety as the Middle Eastern tensions prevent a full risky-on rally. Hedging against the stronger dollar is recommended to multinational firms. When the Swiss franc rises alongside the dollar, it's a classical signal that the smart money is bracing for a geopolitical shock. Despite the geopolitical gloom, Barron's reports the UM's corporate earnings remain rapturous for the first quarter of 2026. Stock market, bulls and corporate employees companies are successfully passing higher costs to consumers, maintaining profit margins that have defied the more recession predictions. Stay tuned for the upcoming World Economic Outlook on April 14th. Strong earnings are currently the only thing keeping the stock market from a total correction. Copper miners are underperforming, crashing, a major warning signs for the global construction and EV sectors. This was impact on the renewable energy farms and the industrial investors. Copper prices have failed to track the rally in gold and silver, suggesting that the actual industrial demand for the metal is weakening. Keep an eye on the global ex copper miners ETF or signs of broader industrial slowdown. Copper is often seen as bull-bearer for the global economy. If it stays low, recession might be closer than we think. New data shows a massive spike in US users migrating to Bitcoin-based casinos to avoid traditional banking fees. This was impact on the online gamblers and the banking industry. Features like the probably fair mechanics and the instant lightning network withdrawals are pulling users away from the flat regulated betting sites. Exercise caution as those platforms operate in a legal gray area. This shift highlights the growing shadow economy where crypto is used for the speed and privacy over traditional banking rails. Prime Minister Keir Starmer insists Britain is well placed to weather the Iran crisis despite admitting the conflict will reshape the UK's future. This was impact on the United Kingdom national security and the British public. Speaking after the recent escalation in the Middle East, the PM confirmed the government is drafting emergency measures to protect UK's energy security and the supply chains. Watch for an update on UK Royal Air Force development in the region. The UK is attempting to project strength, but its reliance on the important energy makes it one of the most vulnerable G7 nations to this specific conflict. The Bank of England has warned that CPI inflation is now likely to spike between 3 to 3.5% this quarter, killing hopes of the April return to target. This was impact on the UK households and the Bank of England's Monetary Policy Committee. Just months after the predicting a return to 2%, officials admitting that surging energy and the fuel costs from the Middle East war have fundamentally changed the math. Expect the next interest rate decision to be hawkish hold rather than a cut. This delays inflation cooling means higher for a longer in interest rates, putting more pressure on the mortgage market. The Financial Times Stock Exchange FTSE 100 has surged over 3%, crossing 10,340 points mark as investors pile into defensive energy and defense stocks. This was impact on the UK pension funds and the retail investors, while the wider economy struggles the heavy concentration of oil majors and aerospace firms in the UK Tops Index is providing a rare haven for capital. Look for volatility if a ceasefire talks in the Middle East or lose momentum. The K-shaped recovery continues. The stock market is thriving while the average British consumer faces a renewed cost of living scourge. The UK mortgage markets are back in turmoil. Today, as rising yields force lenders to pull their cheapest fixed rates deals. This was impact on the homeowners and the first-time buyers. The cost of wholesale funding for banks has jumped alongside government borrowing costs, reversing the downward trend in the mortgage rate seen earlier this year. If you are within 6 months of the term mortgage, lock in rate before the further hikes. This volatility threatens to stall the UK housing market recovery just as the spring buying season brings. Diesel prices in the UK has skyrocketed by the 29p per liter in the 5 weeks, marking one of the fastest pricing hikes in the history. This was impact on the logistics companies and the daily commuters. Since late February, petrol is up to 10% and diesel is 20% due to the disruption of the global crude supplies and rising refining margins. Watch for the government decisions and rising refining margins. Higher fuel costs acts as a steel tax on every part of the UK economy, from the grocery deliveries to public transport. Business leader optimism has crashed to record low of -76 on the Institute of Directors Economical Confidence Index, the worst reading since the survey began. This was impact on the UK SMEs and corporate investment. The Institute of Directors report that uncertainty over the Middle East conflict is causing firms to freeze hiring and cancel major capital projects. Monitor the World Economic Outlook release on April 14th for the official global downgrades. When business confidence stays this low for this long, it often acts as a self-fulfilling properly for the technical recession. The UK government has officially laid down the money laundering terrorist financing regulations 2026, bringing a new era of scrutiny to crypto firms. This has impact on the UK-based crypto exchanges and the digital assets investors. The new rules force enhanced due to diligence and give the Financial Conduct Authority more power to block charges in ownership for registered crypto businesses. Ensure your crypto provider is on the FCA's registered list to avoid service disruptions. Britain is positioning itself as a clean crypto hub, even in its means driving out small startups that can afford the compliance cost. Forecasters from the Barclays and the KPMG has slashed UK 2026 growth predictions to as low 0.4% as the energy stock bites. This was impact on the UK Treasury and the public sector workers. Rising energy bills and forcing consumers to rip in spending, which accounts for the lion's share of British economic activity. Watch for the Chancellor to possibly announce new autumn help for the household energy bills. Lower growth means less tax revenue potentially leading to the more borrowing on spending cuts in the next budget. The pound is struggling to hold its ground against the US dollar as safe haven demand draws capital away from London. This was impact on the British tourists and importers. Despite the Bank of England hawkish stance, the dollar status and the global currency is winning out and geopolitical risk exaggerate. If you are buying dollars for the business or travel, consider laying regular purchases. A weaker pound makes imports, especially energy and food, more expensive, further fueling the UK's inflation problem. Ofgem's new energy price cap officially take part effect this week, lowering typically household bills by roughly £117 or 7 cents. This was impact on 20 million UK households, while Wholesale gas prices are currently rising. This cap covering April to June was set based on the lower prices earlier in the year, providing a temporary buffer. Check your direct debit levels to ensure your supplier is applying the new lower rates. This is the claim before the storm. As the current stage is the wholesale natural gas will be likely to hit the next price cap in July. Prime Minister Anthony Albanese has assured Australians the nation is well placed to handle Iran-Israel escalation, despite admitting significant economic headwinds. This was impact on the Australian national security and the fuel prices. The federal government is fast-tracking emergency and security protocols as the conflict enters its second month, citing a direct threat to critical shipping lanes. Expect a formal update on the strategic fleet plan by the end of the week. As a net importer of the refined fuels, any prolonged disruption in the Middle East puts Australia's transport and logistic industry at the high risk. The Reserve Bank of Australia has delivered a shock 25 basis point hike, taking the cash rate to 4.10%, split decision. This was impact on the mortgage holders and the small business owners. The Reserve Bank of Australia cited sticky inflation and a sudden energy shock for the move within the 3 months bank bill swap rates silently jumping to 4.31% in response. Borrowers should prepare for the immediate pass-through from the big four banks. This move signals that RBI is prioritizing inflation control over the economic growth, increasing the risk of the hard landing in late 2026. The Australian Securities Exchange 200 has tumbled sharply after hitting a record high of 9,200 points earlier this week as the energy shock finalized its. This was impact on the superannuation funds and retail investors. Gains in the mining sector were wiped by the massive sell-off in the retail and banking sector shocks driven by the fears of reduced consumer spending. Watch the 8,800 point support level for sign of deeper correction. The market's invincibility is being tested. Investors are moving from growth to defensive assets like gold and bonds. Australian farmers are facing a crisis and urea prices surged 50% in the last 4 weeks due to natural gas shortages. This was impacted on the agriculture sector and the future grocery prices. A supply shock to the global urea exports combined with the soaring gas prices used in production has sent farm input costs to their higher levels since 2022. Monitor Robobank's upcoming agribusiness outlooks for the price mitigation strategies. Higher input costs today means more expensive food on Australian shelves by the end of the year. Two-tier property crash. New data shows Sydney upper content home values fell 1.8% this quarter, while the more affordable low content grew by the same amount. This was impact on the property investors and the first home buyers. Tightened borrowing limits are forcing buyers out of the luxury market and into the affordable land, creating extreme competition for the entry-level homes. Look for the opportunities in the regional Western Australia, where values in the Bunbury have jumped 22% year on year. The Australian dream is becoming a tale of two cities where the middle class is priced out of the quality and forced into high competition zones. The regulatory knows. The Australian Securities and Investment Commission has officially placed cryptocurrency firms on its main risk list for 2026. This was impact on the Australian crypto exchanges and digital asset holders. ASIC warned that companies operating on the fringes of regulation are exposing the clients to unlicensed advice and misleading practices. Verify your exchange is compliant with the upcoming 2026 licensing framework. This marks a turning point where the Wild West era of Australian crypto ends, likely driving smaller, non-compliant players out of the country. Alumina prices have spiked by 100% this month, threatening Australian positions with the stable global supply of the aluminum metals. Industrial manufacturing and mining balance sheets, infrastructure limitations, and high electricity costs in acceleration process are squeezing refining margins just as global demand peaks. Watch for the quarterly pricing adjustments in the major supply contracts this week. Australia is a global benchmark for the alumina. When our prices spike, the cost of everything from the soda cans to aircraft parts rise globally. The Australian dollar has dropped below 69 US cents today despite showing the resilience against the other major currencies like the pound. This was impact on the importers and the overseas travelers. Rising interest rate expectations in the US are drawing capital away from the Australian dollar. Even the Australians' own rate hikes provide a partial floor. If you are importing goods, consider hedging against the further slides toward the 67-cent mark. A weaker Australian dollar makes our exports more attractive but adds further imported inflation to the cost of the petrol and electronics. Diesel prices across regional Australia have risen by nearly 30 cents per litre in 5 weeks, the fastest climb on record. This was impact on the trucking companies and regional communities. Outbreaks of the conflict in the Middle East have tested global supply chains, leading to immediate procurement pressure for local fuel distributors. Check your local fuel check apps regularly as price cycles are becoming shorter and more volatile. High diesel prices are direct tax on the economy of the distance that defines the Australian economy. Bitcoin has dipped below the $67,000 mark this morning as the Australian traders move into the risk-off mode. This was impact on the local crypto portfolios and the institutional adopters. Derivatives data shows a surge in short positions among the traders as geopolitical tensions make speculative assets less attractive. Keep an eye on the resilient tokens like the Algonda and the Render, where you have bucked the downward trend. Crypto is no longer seen as digital gold hedge during this war. It is currently trading like a high-risk tech stock. Prime Minister Mark says the Canada is monitoring closely as the Iran-Israel conflict threatens global shipping and domestic energy security. Canadian oil exporters, consumers at the pump was impacted. With the Strait of Hormuz facing restricted access, global oil prices have surged, creating a windfall for the Alberta energy sectors but spiking costs for the Ontario and Quebec. Watch for the potential federal subsidies to offset heating and transport costs in the upcoming weeks. Canada finds itself in the classic paradox, a major energy producer while whose citizens are suffering from the very global price spike that enrich its resource sector. The Bank of Canada has admitted that reaching its 2% inflation target is stalling as the geopolitical tensions drive up the cost of imported goods. This was impacted on the Canadian households and the Bank of Canada Governing Council. After the falling towards the target in early 2026, CPI is now projected to hover around 2.2% for the remainder of the year due to the rising fuel and food logistics cost. Prepare for the higher for the longer rhetoric from Governor Tiff Marcon in the next briefing. This stall likely puts an end to any hopes for the significant interest rates cut before this summer. The Bank of Canada has officially maintained its policy rate at 2.25% with the next announcement scheduled for the April 29. This was impacted on the mortgage holders and the commercial borrowers. While inflation is cooling, the bank cited global uncertainty as the primary reason for holding steady rather than the cutting rates for the stimulate a sluggish GDP. Homeowners on variable rates should be keep their budgets tight as no immediate relief is in the sight. A 2.25% rate is not new normal, but it continues to test the resilience of the Canadian housing market. The Toronto Stock Exchange is seeing a massive influx of capital into the mineral exploration stocks as the investors flee volatile tech sectors for the hard assets. This was impacted on the mining investors and the Newfoundland and Labrador economy. Companies like Newfound Gold and seeing increased volume as geopolitical instability drives gold and silver toward the record valuation this April. Monitor junior miners for breakout potential as the safe haven trade intensifies. Canada Scores heavy index is outperforming its US counterparts, proving once again that Canada is a global hedge against the uncertainty. The Liberal government has introduced the Strong and Free Elections Act, which proposed a total ban on crypto donations to political parties. This was impacted on the political donors and the Canadian crypto industries. Citing involving trades and the foreign interference, the bill aims to eliminate hard-to-trace digital transactions like Bitcoin, Ethereum from election financing. Expect Finn's debate in the House of Commons regarding the privacy versus transparency in the digital finance. This move signals a tightening regulatory environment for crypto in Canada, treating digital assets as high-risk tools for subversion. A new poll reveals that a staggering 1% of Canadians are feeling pinch of the gas pump, with 30% reporting major impact on their finances. This was impact on the commuters and the logistic industry. Gas prices have risen since the war in the Iran began, with Atlantic Canada and Ontario reporting the highest levels of financial crisis. Watch for provincial government for consider temporary fuel tax holidays to provide relief. Energy costs are no longer just a headline, they are forcing actual lifestyle changes for the 1 in 5 Canadas. Canadian retail sales are projected to remain below historical averages through 2026 as carrying costs eat into disposable income. This was impact on the small businesses owners and major retailers. High price to income ratios and the job uncertainty are keeping buyers on the sidelines, particularly in the most expensive urban centers. Retailers should look to value-based marketing to capture a more cautious consumer. The wealth effect from the rising home prices have vanished, replaced as a scarcity mindset among the Canadian middle class. National home prices are expected to decrease by nearly 4% this year, with the condo market in Toronto and Vancouver facing a sharp valuation reset. This was impact on the real estate investors and the developers. Very low pre-construction sales have pushed housing starts to near two-decade lows in Ontario, even as the rental supply begins to outpace demand. Buyers waiting for the bottom should watch for the fourth quarter data for the signs of stabilization. The housing bubbling is not a bursting, but it is a certainty leaking, creating the rare window for those with the ready capital. Despite oil prices high, the Canadian dollar is struggling to gain around a safe haven US greenback. This was impact on the importers and the cross-border shoppers. Usually, high crude prices boost the loonie, but the current prices globally risk the sentiment is driving all capital into the US Treasury bonds. If you are buying US dollars for the business, look for the brief dips during the Canadian export announcements. A weaker loonie means higher cost for imported tech and groceries, adding a second layer of inflation to the Canadian economy. Canadian listed spot Bitcoin ETFs are seeing record inflow stability, and institutional investors use them to hedge against the traditional market volatility. This was impact on the institutional fund market managers and pension funds. Unlike retail heavy tokens in the ETF market in Canada is showing signs of maturity with the lower daily volatility compared to the direct exchange trading. Review with your portfolio alternative asset allocation for the CAD denominated crypto products. Canada remains a global leader in the regulated crypto products, even it cracks down on the unregulated shadow use of the technology. Eurozone inflation has surged to 2.5% this month, forcing the European Central Bank to hit the brakes on its planned rate cutting cycle. European Consumer and ECB Governing Council impacted, and preliminary data shows the energy shows jumped 4.9% in March, the sharpest rise in 3 years, driven by the Middle East conflict. Germany and Spain saw even sharper spikes at 2.8 to 3.8% respectively. Watch for the ECB to keep the deposit rate steady at the 2% in the upcoming weeks. The last mile of the inflation tide is proving the hardest as war-driven energy costs undo months of progress toward the 2% target. Finance ministers from the 5 major European Union nations are officially demanding a block-wide windfall tax on energy gains as the oil and gas profits soar. This was impacted on the energy companies ENI and Total Energies, Shell, and European Union taxpayers. Led by the Spain's Carlos, ministers from the Germany, Italy, Portugal, and Austria signed a letter to the European Commission citing market distortions caused by the Iran-Israel war. The Commission is expected to review a new solidarity contribution framework by mid-month. Brussels is looking to redistribute excess profits to help struggling households, but the move is cooling vital investment in green energy transition. European natural gas prices have doubled after Qatar Energy officially declared force following drone strikes on its key production facilities. This was impact on the European utility providers and the industrial manufacturers. The legal clause allows the Qatar to cancel its deliveries without the penalty and effectively blocking millions of cubic meters of the gas from the reaching European terminal at the critical time. Monitor the Dutch ETF gas futures for the sign of the break above 60 euros per megawatt hour. This supply shock exposes Europe's lingering vulnerability to external energy sources 4 years after the start of the decoupling from the Russian gas. The European Central Bank has slashed its 2026 GDP growth forecast for the Eurozone to just 0.9% as the energy tax hits industry. This was impact on the European Union businesses and the labor market. The 0.3% downgrade from the previous estimates reflects high borrowing costs and the sudden surge in manufacturing inputs due to the shipping disruptions. Investors are rotating out of the European cyclical stocks into the defensive, healthcare, and tech. Europe is teetering on the edge of the stagflation, where the strike price rise while the economy stands still as nightmare scenario for policy makers. The European Securities and Marketing Authority is warning crypto firms that 2026 deadline for full markets in crypto assets compliance is now non-negotiable. This was impact on the crypto asset service providers in the European Union. By mid-2026, any firm selling tokenized securities or stablecoins without a specific markets in the crypto assets license will be blocked from the 450 million person European Union market. Check if your digital asset providing has moved away on the transition phase into the full authorization. The European Union is successfully standardizing crypto, but the high cost of compliance is causing a great consolidation where only the large firms survive. The European Union is fast-tracking the citizens' energy package to break the link between the high gas prices and the electricity bills. Households in the northern and western Europe was impacted. The proposal moves towards the zonal pricing, which would allow the regions with the high renewable energy production to enjoy the lower electricity costs regardless of the global gas spikes. Look for the formal route to vote on COM 2026-115 directive in the late April. It is a specific European Commission legislative proposal titled by the Citizens Energy Package aimed at the protecting consumers from the volatile energy markets. If passed, this would be save European Union consumers an estimated 2.5 billion euros annually and finally reward regions for their investment in the wind and solar. The euro has dipped toward the 1.05 level against the US dollar as the safe haven demand pulls capital across the Atlantic. This was impact on the European importers and the US bond travelers. Despite rising Eurozone yields, the dollar's status as a wartime hedge is spinning out, making it more expensive for the European firms to buy dollar-denominated oil. Hedging against the move toward the parity is becoming a priority for the EU treasurers. A big euro acts as an inflationary fuel, making every barrel of fuel and every microchip imported into Europe even more expensive. The Swiss bank is seeing its strongest appreciation in 2 years, classic signal that institutional investors are bracing for a major market shock. This was impact on the global currency traders and the European hedge funds. While the dollar is strong, the surge in France are suggesting the specific risk of flight into the non-European Union, non-US assets as the Middle East conflicts widen. Monitor the euro against the Swiss franc pair for the breach of the 0.93 support level. When the franc rises this fast, it usually precedes a period for the high volatility in the European equity markets. European carbon prices are spiking as utilities are forced to switch back to the coal-fired power plants due to the natural gas shortage. This was impacted on the high-emission industries and the Green Deal agenda. The temporary switch to coal increases as the demand for the permits to pollute, driving carbon credits toward the €100 per ton mark. Watch for the emergency release on emission trading system reserved by the European Commission to cool the market. The energy crisis is forcing a short-term retreat from the climate goals, creating massive tension between the energy security and the decarbonization. The European Central Bank has confirmed that the first large-scale digital euro pilots will be launched in fourth quarter of 2026. This was impacted on the European banking sector and retail payments. The pilot will focus on the online, offline peer-to-peer payments, aiming to provide state-backed alternative US-dominated credit card networks and the private stablecoins. Prepare for the new wave of privacy versus